Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the next problem number 5. Already 4 main problems and 4 short problems I've completed on general insurance companies till the last video. So if you have watched the earlier videos, definitely you got the command regarding how to make the revenue account of general insurance companies. What are the rules to be followed while making the revenue account? Now, before starting the next problem, that is problem number 5, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready. Now I am reading out the 5th problem. Prepare a revenue account in respect of fire business from the following details for the year 2003-2004. The reserve for unexpired risk on 1/4/2003, that is beginning of the year reserve, at the rate of 50%. That means 50% of net premium was calculated at the beginning of the year. So 1,80,000 additional reserve 36,000. So at the beginning of the year we have statutory reserve 1,80,000 and additional reserve 36,000. Both will add up. Then estimated liability for claims intimated on 1/4/2003 and estimated liability for claims intimated on 31st March 2004. Beginning of the year, end of the year, outstanding claims are given. The outstanding claim, end of the year outstanding added, beginning of the year outstanding deducted. As usual, every problem we are doing. Then claims paid, schedule number 2, right on there itself. Then legal expenses. If nothing is given, legal expenses will be taken under schedule number 4, operating expenses. Sometimes it will be given legal expenses regarding claims. In that case, legal expenses will be added to claims. But here nothing is given, only legal expenses are given. So we take it under operating expenses. Premium recovered. Premium recovered means premium received, schedule number 1. Then premium on reinsurance accepted. The premium on reinsurance accepted will be added. Then premium on reinsurance ceded. This will be deducted. Accepted will be added, ceded will be deducted. Then commission on direct business, schedule number 3. Commission paid, schedule number 3, commission on direct business. Commission on reinsurance accepted, this will be added. Then medical expenses, schedule number 4, operating expenses. Reinsurance recoveries, these are the claims covered under reinsurance. So sometimes it will call it as reinsurance recoveries. Sometimes it will say claims covered under reinsurance. Same. We have to deduct these recoveries from claims. Schedule number 2. In schedule number 2, claims paid. In that, we have to deduct this reinsurance recoveries. Bad debts. Bad debts. Schedule number 4, operating expenses. Commission on reinsurance ceded, minus. Expenses of management, 4, operating expenses. Interest, dividend and rent, income from investment, directly, no schedule. Profit on sale of investment, directly, income from investment, no schedule. Create reserve on 31st March 2004 to the same extent as on 1st April 2003. So we have to create the reserve for the unexpired risk at the end of the year, at the same percentage what it is carried at the beginning of the year. So at the beginning of the year you can say 50%. The net premium, whatever net premium we earn during the year, of that 50% is the statutory reserve. Plus additional reserve. Additional reserve, how much was there? Beginning of the year 36,000. So if you closely watch, 1,80,000 is the statutory reserve and 36,000 is the additional reserve. So if you calculate what is the percentage of additional reserve on statutory reserve, you can see 20%. 20% of 1,80,000. 20% of 1,80,000, it is 36,000. That means at the beginning of the year, additional reserve are 20% of statutory reserve. We make a conclusion. Because in the last line it is given, same reserve we have to carry at the end of the year, whatever was there at the beginning of the year. So at the beginning of the year, 50% statutory reserve, and whatever statutory reserve we get, of that 20% will be the additional reserve. That was at the beginning of the year. Same rule we apply at the end of the year. That's all. This is the problem. Now see here, fire insurance business revenue account for the year ended, fifth problem. Then particulars, schedule number, amount. Premium earned 4,06,000. How we got 4,06,000? Here you see. Schedules forming part of financial statement. Schedule number 1, premium earned. Premium received 4,86,000 given in the problem. From to this we add premium on reinsurance accepted will be added, and premium on reinsurance ceded will be deducted. The net premium we got 4,75,000. Now carefully you have to see adjustment regarding risk reserve for unexpired risk. Adjustment regarding the change in reserve for unexpired risk. So end of the year. End of the year statutory reserve 50% of net premium. So 50% of 4,75,000 you got 2,37,500. So 2,37,500 is the statutory reserve. Now additional reserve is 20% of statutory reserve. 20% of statutory reserve that was there at the beginning. Same 20% of statutory reserve we have to apply at the end of the year. So 20% of 2,37,500 it comes to 47,500. So total reserve will be 2,85,000 at the end of the year. At the end of the year, reserve for unexpired risk 2,85,000. Now beginning of the year, 1,80,000 was the statutory reserve and 36,000 is the additional reserve. Total reserve is 2,16,000. Now see here, closing end of the year reserve is more. End of the year reserve is more. So that's why we have to deduct. Now 2,85,000 minus 216, 69,000 outer column. Now deduct 475 minus 69, 4,06,000. So 4,06,000 is the premium earned. First item completed. Now interest, dividend and rent, no adjustment, nothing, no complication. Directly will take profit on sale of investment. Total of A 4,33,000. This is the revenue. Now expenditure. Claims incurred, schedule number 2. Here you can see claims incurred. Claims paid. From this we deduct claims covered under reinsurance. This is nothing but reinsurance recoveries. Reinsurance recoveries or claims covered under reinsurance means same. 32,000 deduct. Outstanding claim end of the year added, outstanding claim beginning of the year deducted. So claims incurred 3,44,000 over. Now commission. Commission on direct business. To this we add commission on reinsurance accepted, deduct commission on reinsurance ceded as usual. Then 48,050. Operating expenses, management expenses, legal expenses, medical expenses, bad debts. Add up the total 1,800,000. So we got the B total. A total, B total we got. Now operating loss because expenditure is more than revenue. Revenue 4,33,000. Expenditure 492,850. So if you deduct A minus B, you are getting minus 59,850. It is minus 59,850. So we call it as negative operating loss. So this is the end of problem number 5. Come on, now we'll start the next problem, problem number 6. See the problem carefully. The following figures are from the books of Varuna Fire Insurance Company Limited at the end of their financial year ended 31st March 2004. Rupees in thousands. Now, first of all, here we are given the trial balance items and a few adjustments are also given. The trial balance items will appear only once, whereas adjustment items will appear twice. Now what we have to make in this problem, from the above, you are required to prepare fire revenue account, profit and loss account and balance sheet of the company after taking into the following consideration. First time, we have to make the profit and loss account also. Previous 5 problems we have completed where we have prepared only revenue account and balance sheet. But here we have to make the revenue account, profit and loss account and balance sheet. So that is the new point. See carefully, it's a lengthy problem. Fire fund. The meaning of fire fund is reserve for unexpired risk. Reserve for unexpired risk. That is called fire fund. So beginning of the year fire fund is 6,20,000. This is the risk for unexpired, reserve for unexpired risk at the beginning of the year. General reserve 3 lakh. This will be taken under reserves and surplus, schedule number 6. Then investments, schedule number 8. Then premium, schedule number 1. Claims paid. Claims paid will be taken under schedule number 2. Claims incurred. Commission on reinsurance ceded. This will be taken in schedule number 3. That is commission. Then commission on reinsurance ceded. That is deducted. That is deducted from commission. Put minus sign there beside ceded. Then commission on direct business. That is schedule number 3. This is commission paid. This commission on direct business means commission paid. To this commission paid, we add the commission accepted and commission ceded should be deducted. The next item given, commission on reinsurance accepted. The accepted will be added and ceded will be deducted from commission paid. Next, director's fee, rates and taxes, rent. Now see carefully here. Director's fees, rates and taxes, rent. Normally, when we are required to make the revenue account only, in that case, we take all these items under operating expenses. These 3 items, director's fees, rates and taxes, rent. These 3 items will be taken under operating expenses if we are making only revenue account. But in this problem, we have to make the revenue account and also we have to make the profit and loss account. So these 3 items we will take in profit and loss account under other expenses. Now see the screen here. See the board here. Profit and loss account, other incomes, other expenses, sorry. In other expenses, we will take audit fees, director's fees, rates and taxes and rent. All these are the other expenses which we taken in profit and loss account. If we are not required to make P&L account, we would have taken these items under operating expenses. Presently, we will not take these items under operating expense, we will take in the other expenses. Next comes sundry creditors, schedule number 13, current liabilities. Cash in hand, schedule number 11. Only once it will come, schedule number 11, balance sheet. Share capital, schedule number 5, only once in the balance sheet. Additional reserve. That means at the beginning of the year, we have statutory reserve and additional reserve. What is the statutory reserve? First item, fire fund is given 6,20,000. First item, fire fund. That is the statutory reserve. Reserve for unexpired risk. So 6,20,000 plus here it is given additional reserve 2,20,000. So 6,20,000 plus 2,20,000, 8,40,000. So 8,40,000 is the reserve for unexpired risk at the beginning of the year, right? Now profit and loss account. This is the profit brought forward from last year. This will take it under appropriations. We'll take it under appropriations. Reinsurance premium. Deduct from premium. Write down there itself. Reinsurance premium. Beside that you write down deduct from premium. Claims covered under reinsurance. Deduct from claims. Deduct from claims in schedule number 2. Outstanding premium. This outstanding premium is given in the trial balance itself. It will appear only once. This outstanding premium will be taken in schedule number 12 in the balance sheet. Current assets. Then claims intimated but not paid 1/4/2003. 1/4/2003 means beginning of the year. The beginning of the year outstanding claim. So while calculating claims incurred, we add the outstanding claim at the end of the year and deduct the outstanding claim at the beginning of the year. So this is the beginning of the year. So this amount of 40,000 will deduct. See here. Claims. Here I have written claims incurred minus plus claims outstanding at the end of the year minus claims outstanding in the beginning of the year. It will be deducted. Next one, expenses of management. Expenses of management will be taken under operating expenses, schedule number 4. Operating expenses. But here there is a misprint in the question paper. By mistake I have typed 87,965. It is not 87,965, it is 2,87,965. Make the correction in the question paper here. In the question paper, it is written 87,965. Before that, write down 2. It is 2,87,965. That is the expenses of management. So schedule number 4 you can see here. Operating expenses, schedule number 4, expenses of management, 2,87,965. There's a printing mistake, make the correction. Next, audit fees. Audit fees should be taken under other expenses. Other expenses, audit fees, only once. Then income from investment. If we are not required to make the profit and loss account, we would have taken income from investment under revenue account. Below premium, below this premium, we would have written income from investment. There we will write income from investment. But in this problem, we have profit and loss account. So income from investment will be taken in profit and loss account, not in revenue account. Then share transfer fees, it is other income. And again, this other income will be taken under profit and loss account, other incomes, share transfer fees. Then loans. Loans will be taken in schedule number 9. Schedule number 9. Yeah, here you can see schedule number 9, loans, 4 lakh rupees. Then agents balances, DR, debit balances, 12th schedule. In schedule number 12, you can see agents balances 1,80,000. Only once it will come. Then cash at bank, 11th schedule. 11th schedule you can see here, cash and bank balances, cash at bank, 1,01,487. So all the items which are given in the trial balance, I have read, I have explained you where it will come. Now I am coming to the adjustment. First adjustment, keep 50% of net premium as reserve for an expired risk and maintain the additional reserve at the same level. At the beginning of the year, additional reserve was 2,20,000. Same 2,20,000 it is asking you to keep at the end of the year also. So at the end of the year, reserve will be 50% of net premium plus 2,20,000 additional reserve. Second, income tax to be provided. Income tax to be provided. This is called provision for taxation. This will be taken in profit and loss account twice. It will appear twice because it is given in adjustment. First of all, provision for taxation will be taken here. Provision for taxation 2,50,000 in P&L account. It is deducted from profit before tax. Again, this provision for taxation will be shown under provisions. Schedule number 14. Last schedule, schedule number 14, provisions. Provision for taxation 2,50,000. Double effect. One effect, it will come in profit and loss account. Other effect under provisions. Next, transfer to reserve 1 lakh rupees. From current year's profit, 1 lakh rupees should be transferred to general reserve. So in appropriations, after calculating the profit after tax, we'll make the appropriations. In this appropriations, we transfer to general reserve 1 lakh. So from the profit, we have transferred 1 lakh rupees. And this 1 lakh rupees will be added to general reserve in schedule number 6. So here you can see schedule number 6, reserves and surplus. Already general reserve is there in the trial balance 3 lakh. In the trial balance, general reserve is appearing 3 lakh. To that 3 lakh, 1 lakh rupees we have to add now, transfer during the year. So double effect over. First 1 lakh rupees we are deducting in appropriations. Again 1 lakh rupees we are adding to general reserve in the balance sheet. Next, proposed dividend 12%. 12% of paid up capital. Always the dividend will be calculated on the paid up capital. How much is the share capital? Here you can see share capital is 6 lakh. Share capital 6 lakh. Now proposed dividend is 12% of 6 lakh. So 12% of 6 lakh, it comes to 72,000. So 72,000 proposed dividend, it will appear twice. First proposed dividend will be taken under appropriations. Under appropriations, 72,000 proposed dividend. Again, this proposed dividend will be shown under provisions. Schedule number 14. Proposed dividend, 72,000. Last adjustment, claims intimated but not paid. That means outstanding claim on 31st March 2004, end of the year. End of the year, the outstanding claims are 60,800. Now this will appear twice. This outstanding claim at the end of the year will appear twice. First of all, it will be added to claims. See here. Claims outstanding at the end of the year 60,800. This is given in the last adjustment. The outstanding claim is added. Again, this 60,800 outstanding claim end of the year will be shown as a liability. Schedule number 13, current liabilities. Current liabilities, outstanding claim 60,800. That's all. All the adjustments items I have explained. Now the solution. Varuna Fire Insurance Company Limited revenue account for the year ended 31st March 2004. Premium earned, schedule number 1. Now what is the breakup of schedule number 1? See here. Schedules forming part of financial statements. Schedule number 1, premium. Premium received 18,01,022 given in the trial balance. Premium received. From that we deduct reinsurance premium. Reinsurance premium 75,017 given in the trial balance. Always we deduct. Reinsurance premium deducted. This is called net premium. Net premium. Now to this net premium we have to make the adjustment for reserve for unexpired risk. Reserve for unexpired risk. End of the year. First we calculate end of the year. 50% of net premium. How much net premium? 17,27,005. So 50% of 17,26,005, you will get 86,300. 86,300. This is the 50%. Plus, it is asking you to maintain the same additional reserve what we have in the beginning of the year. In the beginning of the year, additional reserve was given in the trial balance 2,20,000. Same 2,20,000 we are maintaining at the end of the year. Now add up 2,20,000 plus 86,003, 8,63,000. Yes, 8,63,000 I think. There is one, yeah, it is correct. 8,63,003. 8,63,003. This is 50% of 17,27,005 plus 2,20,000. So 8 lakh plus 2 lakh, 10 lakh. 10,83,000. 10,83,003. It's exactly right. So this is the reserve for unexpired risk at the end of the year. At the end of the year. From this we deduct the reserve at the beginning of the year. It is given in the problem. First item, fire fund is given 6,20,000. First item. That fire fund itself is the reserve for unexpired risk. Plus additional reserve at the beginning of the year 2,20,000. The total reserve at the beginning of the year is 8,40,000. The beginning of the year 8,40,000. End of the year 10,83,000. So end of the year is more. So that's why we are deducting less. So what is the difference? 10,83,003 minus 8,40,000, you get 2,43,003. Deduct 17,26,005 minus 2,43,003. 14,83,002. 14,83,002. That is the premium earned. Now I will take it here. 14,83,002. Premium earned. Schedule number 1. No other income. Income from investment and other income will take it in P&L account. So A, total. Now claims incurred, schedule number 2. Claims paid 4,01,877. From this we deduct claims covered under reinsurance. It is given in the trial balance. Only once it will come. And always, even in life insurance company also we have seen claims covered under reinsurance will be deducted from claims. Then outstanding claim end of the year will be added. Outstanding claim beginning of the year will be deducted. End of the year outstanding claim is given in adjustment, whereas beginning of the year outstanding claim is given in the trial balance. So claims incurred will be 4,08,598. 4,08,598. Then commission, schedule number 3. You can see here, commission. Commission on direct business means commission paid to agents. This is the commission. To this we add commission on reinsurance accepted and deduct commission on reinsurance ceded. Same thing. Now no new point at all. Already in the previous problem also we have done the same thing. So commission will be 2,07,866. 2,07,866. Operating expenses. In operating expenses we take only expenses of management. So see here, expenses of management. 2,87,965. I told you in the question paper there is a printing mistake. 2 lakh is not given, only 87,965 is given. By mistake, there is a misprint. So write it down, 2,87,965. That is the management expenses, expense of management, 2,87,965. Take the total of this B. So A total 14,83,002 and B total is 9,04,422. A minus B, 5,78,573. This is called operating profit. Now this operating profit will be transferred to profit and loss account. So now I am making profit and loss account. The operating profit already we got 5,78,573. Operating profit coming from revenue account. To this income from investment in the trial balance in the problem it is given income from investment. Other income transfer fees is given 2,000. Take the total 6,80,573. This is the total income minus expenses, other expenses, audit fees, directors fees, rates and taxes, rent. 72,869 is the other expense. Now A minus B, income minus expenditure, profit before tax. Before tax profit is 6,07,704. From this we deduct provision for taxation given in the adjustment. Given in the adjustment, provision for taxation 2,50,000. Deduct, we'll get profit after tax 3,57,704. This is the profit after tax. Now we have to make the appropriations because some appropriations are given in the adjustments. What are the appropriations? Profit after tax 357,704. This amount I have taken. Appropriations, two appropriations. Proposed dividend and transfer to general reserve, that is given in adjustments. Proposed dividend 12% on share capital. Share capital 5 lakh. So 12% of 5 lakh. 5 lakh or 6 lakh? 6 lakh. 12% of 6 lakh, 72,000. Then transfer to general reserve 1 lakh given in the adjustment. So total appropriations are 1,72,000. Deduct 172, 1,85,704 is the profit remaining. Brought forward profit in the trial balance, in the problem trial balance, it is given profit and loss account brought forward from last year. The last year's profit brought forward is 50,000. So total profit available is 2,35,704. This balance of profit carried to balance sheet. That's all. So we have completed revenue account, we have completed profit and loss account, appropriations, everything completed. Now I am coming to the balance sheet. Balance sheet as at 31st March. Sources of funds, share capital, schedule number 5. So see here, schedule number 5, share capital 6 lakh. So I have taken 6 lakh rupees share capital. Then schedule number 6, reserves and surplus. In reserves and surplus we take general reserve and profit and loss account balance. Earlier, according to the problem in the trial balance, already general reserve 3 lakh rupees are given. 3 lakh rupees general reserve balance in the trial balance. And during the year, 1 lakh rupees are transferred. Here we have transferred to general reserve 1 lakh. From current year's profit, we have transferred 1 lakh rupees to general reserve. So add up 1 lakh. So total general reserve 4 lakh. Now profit, balance of profit in P&L account. How much is the balance of profit transferred to balance sheet? 2,35,704. 2,35,704. So total 635,704 is the total of schedule number 6, reserves and surplus. 6,35,704. There is no borrowings. 7th schedule borrowings nil. So 12,35,704. This is the total of the balance sheet. Sources of funds we got. Now application of funds. Schedule number 8, investment 20 lakh. Directly given, no adjustment, nothing. Investment 20 lakh. Then schedule number 9, loans 4 lakh. Directly given, no adjustment, 4. Then fixed assets 10th schedule, nothing. No fixed assets are given. Then schedule number 11, cash and balances. Balances with banks. So cash in hand and cash at bank. Both are given in the trial balance. Same amount, 121. Then advances etc. Schedule number 12. Schedule number 12, outstanding premium. This outstanding premium is given in the trial balance only once it will come. Agents balances, that is also given in the trial balance only once. So add up both 1,94,000. So take the total of current assets. A is the total of current assets 316,507. Now current liabilities, schedule number 13. Sundry creditors given in the trial balance. Outstanding claims given in adjustment. Last adjustment, outstanding claim at the end of the year, twice. So 60,800 we have taken here. Outstanding claim at the end of the year, 60,800. Again that 60,800 I will take it here. 13th schedule. So 13th schedule total 75,800. Now 14th schedule, last schedule, that is provisions. Under this provision we take a reserve for unexpired risk at the end of the year. At the end of the year. Reserve for unexpired risk 8,63,003. Here somewhere we have calculated here. 8,63,003. This is the reserve at the end of the year. Plus additional reserve. Additional reserve is 2,20,000. So reserve for unexpired risk 8,63,003 current year plus 2,20,000 additional reserve total. Then provision for taxation given in the adjustment. Adjustment given provision for taxation twice. First provision for taxation 2,50,000 we have deducted. Again provision for taxation will be taken under provisions. Same case for proposed dividend which is given in the adjustment twice. Proposed dividend we have taken in appropriations here 72,000. Again proposed dividend will appear in provisions. Proposed dividend 72,000. Take the total 14,05,003. So 14,05,003. Take the total of this be 14,80,803. Now you can observe here current assets are less, current liabilities are more. A, current assets 3,16,000. B, current liability 14,08,000. Now A minus B, 3,16,507 minus 14,80,803. You are getting negative minus. So net current assets A minus B minus 11,64,296. Now you add up 20 lakh plus 4 lakh minus 11,64,296. You will get 12,35,704. Tally it. The total of liability side, total of asset side. Over. It's a very lengthy problem. So many new points we came across in this problem. First attempt itself you will not be able to completely understand all the points. So my suggestion, if you want the complete command from knowledge point of view, so each and every point you have to understand. I have explained my best, according to the best of my ability I have explained each and every point. So watch this video twice and thrice, then you can be able to get a command. You can enjoy in learning this difficult type of problems. So many adjustments are there. Okay, so this is the end of problem number 6. Totally 6 problems I have completed, long problems on general insurance company accounts. So if you are satisfied with my lecture, give a like to the video. Share my channel in your friends circle, in your group, so that more students can watch the video and increase the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel. I'll continue the next problem in the next video.